Inflation, rising interest rates, the war in Ukraine, and China's slowing economy are all impacting stocks and increasing fears about a possible U.S. recession. The markets are in the middle of the longest sell-off in decades, and it's tough to predict when they might hit bottom. So Joe Saluzzi is the co-founder and partner with Themis Trading, an independent brokerage firm specializing in equities. And he is here now to talk more about what could be on tap for the markets this week. I'm really glad that you're here. You know, the markets are down, then they're up for a little bit, then they're down, they're up. When we see them make a little sort of swerve upwards, should we feel optimistic?
Well, it's good. It's nice that we're opening up higher, and we've seen a lot of these over the past few weeks where we open up higher and then we fade throughout the day.
Right.
Friday was an interesting day because it was down big again, and then we rallied back late in the afternoon. So I personally think we've hit a bottom, at least a short-term bottom here. We've had 7 straight weeks of negative returns, which is really hasn't happened in a long time. So I think right now what you're seeing is all that laundry list that you just read of problems, they're not going away.
Okay.
Those are big issues. But the markets will tend to, we chop around. Like
right. So are we seeing the volatility that we're seeing because we've got these issues that aren't going away?
What's interesting, actually, is that the volatility hasn't spiked to levels that we've seen in the past, like in 2008 with the financial crisis. We've seen what they call a volatility index, or the VIX index. It spiked, right now it's around 30, which is high, but not ridiculous. So I think what that means is that the sell-off, while it's painful, has been controlled. It's been a kind of a slow drip. It's really painful to trade, actually. It's just this slow down. 7 weeks in a row, which is why I think right now we're at a point where, okay, we should see a little bit of a short-term problem, probably a pop, and then we'll see from there.
Are there opportunities, though, that all I know about investing is buy low, sell high. It seems there's an awful lot of low. So are there opportunities here?
It depends on the time frame, depends on what you're looking at. Warren Buffett, who's one of the best investors ever, right, was out recently, and he was buying Citicorp. So he went in with his money, and Buffett's a notorious value investor, right? They look for the lows. And that was a couple of weeks ago, so he probably paid a little bit too much, but he's a long-term investor. So yeah, I think in that sense there are values, depends on what you're looking to do. If you have a problem sleeping at night, let's just say, and you're worried about your portfolio, you have too much risk. You should be paring back your risk at that point.
Right.
It's great when it's going up and everyone's happy, and then you get the opposite effect where the greed effect comes in. I need to be bigger, I need to get more.
Right.
And now it's just the opposite. So I would recommend certainly paring back your exposure to equities at that point.
That makes sense. That's good advice. You mentioned the S&P 500 rallied Friday to avoid closing in a bear market. People hear it all the time, bear, bull. Can you explain what a bear market is and what a bull market is?
Sure. It's a technical definition. Down 20% from the highs is technically a bear market. We actually touched it on Friday, so technically we hit a bear market term. It's just a term. It doesn't really mean anything. But when I look at the numbers, I say we're down 18% this year. Sounds really bad. It's only May. But over the past 3 years, on average, we were up 26% per year. So it doubled. Within 3 years, the market actually doubled. So if you're down 18%, what I like to do actually is I look at the graphs, and I trade day to day, so I'm always trading intraday. I'm always looking at volumes and so on. But sometimes I'll just pull out the graph. Pull it out to 5 years, 10 years, and you know what the sell-off looks like? It's just a little blip at this point.
Yeah.
So I'm saying don't panic, but certainly be concerned. Again, that list of problems that you read at the beginning are not going away.
I think that what you just said, though, is a really good reminder, especially for people who are investing long-term, like when it comes to your 401k. Because you look at your 401k like me, and I go, oh my gosh, like I can't, it's like down, tens of thousands of dollars in a matter of no time. But long-term, obviously, I have more money than I would have ever had. And so your advice to people who maybe are long-term investors, like 401k investors, about being concerned about their money.
Yeah, well, I haven't touched mine. So if there's an example, and I'll use myself as an example. I'm not at retirement age yet. If I was in a retirement age at this point, then you have to be concerned, because then you're going to live off of that for your income. And again, I would definitely change your risk exposure. You've got too much risk if you're using your 401k to live, and you've got too much equities. But if you're younger, 20, 30, 40 years old, and you're building a wealth effect, actually sometimes these things are good, because your lower cost is coming in. Now you may get lower cost later in the year, because I don't think we're done selling off. But like I said before, I think we're in for a short-term pop. But are you going to trade your 401k? No. I mean, you're investing in that for the long term, and hopefully compounding returns. You did great over the last 3 years, right? So
I'm not complaining. I'm not complaining. Joe Saluzzi, thank you so much.
My pleasure. Thanks for having me.